U.S. stock markets were rattled on March 3, 2026, as escalating geopolitical conflict in the Middle East pushed oil prices sharply higher and sparked broad selling pressure among major indexes. Investors are closely watching how rising crude futures and inflation concerns could influence equities and interest rate expectations. The Dow Jones Industrial Average slid significantly, reflecting mounting risk aversion among traders, while the S&P 500 and Nasdaq Composite also showed weakness early in the session. Energy prices surged as concerns about disrupted crude supply routes, particularly in the Strait of Hormuz, drove oil futures up sharply. Crude benchmarks like Brent and West Texas Intermediate both climbed over 7%, reaching multi-session highs, as markets grappled with the prospect of tightening global supplies. Higher oil prices stoked fears of renewed inflationary pressure, prompting investors to reassess future Federal Reserve rate moves. Defense and energy stocks rallied amid flight-to-safety positioning, while sectors dependent on lower energy costs, like airlines and consumer discretionary, fell. Treasury yields ticked higher as bond markets reflected shifting expectations on economic policy. Analysts warned that if hostilities widen or prolong, elevated energy prices could continue to weigh on stocks, increase inflation risks, and reshape investor strategies across asset classes.